We are live, ladies and gentlemen. Remark AI successfully optimized on Intel architecture. We also have Intel awarded up to $3 billion by the Biden-Harris administration for secure enclave. And finally, probably the biggest catalyst for Intc, Intel and AWS expand strategic collaboration, helping advance US-based chip manufacturing. This thing was on the back foot, and now it's coming back with some strength. And now we have a multi-year, multi-billion-dollar collaboration accelerating development of chip manufacturing in Ohio. Wow, in Ohio, where dogs are being eaten, apparently, allegedly. But jokes aside, this is big for INTC. Which, if we look at the charts here, because I am a chart guy, we switch over to the charts, and you'll notice this stock used to be at $50. You zoom out to the monthly, even better. Let's zoom out to the quarterly, and you see it did hit a high of 62. At one point. We go back to the weekly, and it has bottomed out at $18.50 with a recent high of $50. Guys, this is probably the best time to buy. But if you want to be accurate, you want to buy the dip. I wouldn't buy right here. This is in a clear trading range. For those of you who follow my channel religiously, you know I love trading ranges, and you know exactly why. There is a document in the description below if you want to download it, where I go over my strategy. Tilray stock, for example, it's been trading in a range since last year. For over a year and a half now, it's been trading within this range between $1.70 and $2. Plus, you buy at the bottom of it, and you continue to abuse the trading range so long as it's going to hold, right? And you keep making money. And that's what I'm seeing here with INC. That's why it is on my radar, and I'm letting you guys know. I mean, this thing used to be at 50 plus. Now it's down here at 18, and with these contracts, there's a lot of potential for this one. But keep in mind, it is election year, and on top of that, the market has been kind of choppy. We go up and down with no clear breakout to the upside, creating those higher highs, higher lows. We did create a higher high on SPY, but we'll see if it has any significance because it is pulling back. So keep an eye on what the market is doing. Don't just blindly throw money at something just because, oh, it looks like a good buy. You see the market tried to create a higher, look at that. Whew, oh, that is ugly. It tried to create a higher high. In order for a bull run to continue, the stock market as a whole, the SPY, the top 500 companies, need to continue, at least on the stock, and needs to continue to perform and create those higher highs, higher lows. We're seeing a change in that, which could mark the start of a bear market. It could mark maybe something else. We don't know. We don't know what's going on. What we do know is we are having a hard time continuing the bull run. So that's what I'm saying. Be a little more cautious. Wait for it to come down to 1850-ish, somewhere in that area. That is your load zone. Anytime it comes down here, it's being bought up by the smart players. Be patient, exercise discipline. Get in down here. You don't want to buy at the top of it, because you can see anytime it's come down up to the top, it's sold off every single time, especially with the market pulling back as well. So I would say 1850 is the buy zone. Get in there if you can. That is the cheapest you'll be able to get it for the time being. That doesn't mean it can't get any cheaper. If we go back to the quarterly, you can see it can come down as low as $13, even $7. So I would absolutely hold off and see if this is going to either break out, because if it breaks out above 22, we could see it close a gap here to 28. But as long as it's going to trade within this range, I would say abuse the range, buy at 1850. That's it for the video, guys. Hopefully you like this play. I will see you in the next one.